There's recent evidence of a slowdown in the housing market here in the UK. Geographically, London appears to be the drag. What are the dynamics at play? Well, Jeremy Naylor, Fellow at the Royal Institution of Chartered Surveyors and the former Chief of the residential branch of the RICS. He also owns the estate agency Jeremy Naylor and Company. What is this? Is this simple demand and supply that is at play here?
Well, partly. I think London is bringing the overall price levels down because, of course, prices were going up so far and so fast over the last few years, and inevitably affordability kicks in sooner or later, and it's meant that London prices in particular have softened, whereas the rest of the country has sort of not been so badly hit.
How has 2018 started for you?
It started quite well in terms of viewings, which is they've got to start somewhere, people going to look at property. It remains to be seen what's going to happen, whether or not that's going to translate into sales. I think a lot of the buyers looking at the moment, potential buyers out there, seeing who's going to blink first. They're going to look at property and they want to make sure that they're not overpaying. They want to see the direction of travel for the market before they actually steam in and start making a few offers.
Yeah, which end of the market do you think at the moment is the most sluggish? We've been talking a lot recently about the concerns that the high end of the market has, but at the same time, affordability is such a big issue at the bottom end.
Very much so. I think the top and the bottom are always the quite interesting barometers. Of course, stamp duty at the top end, which came in December 14, that change. That's a lot of people say, well, it's only going to benefit, if they change it, it's only going to benefit the top end of the market, but not so. That's had implications right through the market, and first-time buyers are also feeling the pinch, and affordability is an issue. You know, inflation's been going up, wages haven't kept pace, and that stretched a lot of people in terms of the budget. And of course, interest rates going up, the base rate, despite a lot of fixed rate mortgages, that hasn't helped either.
Yeah, do you think the government's doing enough as well to stir interest, especially at the bottom end of the market? I mean, the Help to Buy has run its course. We've now got this idea about reducing stamp duty for first-time buyers. Those are up to 300,000 or so forth. Is the government doing enough, do you think?
Personally, no. I think the most important thing is to see accessibility to the market and transactions. And we've seen from figures recently, last day or two, transactions are not collapsing, they're fairly steady, but that has an implication for the whole market and affecting job and social mobility, and there's not enough moves. We're still way below where we were in the peak. Serious people in the property business don't look at the booms and busts of prices, they look at transaction levels, and they want to see people more easily moving in and out.
Well, that's the thing, isn't it? Volumes. I mean, what sort of volumes are you seeing at the moment? You talk about some parts of the market doing better than others, but in terms of overall volume, have you noticed a marked downturn in the number of turnover houses you're selling or seeing?
Very much so. We have noticed a downturn, particularly in the upper levels. Transaction times are lengthening because people are more cautious. And of course surveyors are more cautious as well. People are getting there, but they're just taking longer to do so. Buy-to-let
market. I know that you're in the lettings business. Aren't people buying as many houses to let now as they were? We had a lot about a lot of headlines, of course, on the way in which the government's changed the tax, the ability to reduce tax on buy-to-lets. Is this having an effect?
Yeah, it's a very fine balance buy-to-let, because on one hand, I think in some ways you could say the government were absolutely right to bring in some additional measures there. I think some of the returns were very, very high, and I'm sure they saw the opportunity to get more of the, take more in tax there. But you've got to be very careful about pushing the landlords too high, because there's a great shortage of affordable property to buy and to rent. And not only have we seen additional tax implications for landlords, but the stamp duty there, the stamp duty and also regulations have changed very much for landlords. So if too many leave the sector, then of course it pushes rents up even higher and makes it harder for aspirational first-time buyers to get their first rung of the ladder, get on the first rung of the ladder.
In terms of those deals that you are seeing within the buy-to-let sector, those people that are still buying, are they buying with a mortgage or are they buying free of any debt?
Well, the ones that are more active, the ones that are free of debt, because we've seen from the lending figures, actually buy-to-let lending figures have fallen away, whereas first-time buyers and home movers have actually picked up. So clearly, some buy-to-let investors are not liking the change in environment. They are out of the market. Remains to be seen if too many sell. If too many sell, then that's going to have an implication for the balance of the rest of the market. But at the moment, we're not seeing too much of that. Some people are selling, but not too many.
What about the migration element of this?
Yeah, that's very crucial. Of course, with Brexit, people are looking at those numbers a lot, and it's difficult to find the real hard data of what's happening. All I can tell you is on the street, at the sharp end, we are noticing a lot of people going back, particularly to Eastern Europe, and not necessarily being replaced. It's not necessarily Brexit alone which is determining that return. It's maybe the final straw. You know, some people have been here 10, 15 years. They want to be with families. As they get older, life expectancy might be lower there than here. And they're thinking, well, maybe we should go back as we've been here for a while. And this is sort of the final straw. And they're not being replaced in the same numbers as they were previously by perhaps people in their late 20s, early 30s.
We're now in the middle, or just starting out on the cycle of house builders producing earnings. I know that you are in the new build market as well, because you sell in the new build market. Clearly, this is a big element. We talk about government intervention and so forth. I want to get onto that in house builders in just a minute. But are you seeing a lot of new homes turning over, or is that a more difficult end of the market?
Well, it can be, because of course decisions are made about new homes maybe 3 or 4 years or more before we actually see them on the street and available for sale, because of course the land has to be acquired, negotiated, planning has to be obtained, and then the thing has to be built. And what was the right decision maybe 3, 4 or more years ago may not be the right decision now. I think when the market ticks back a bit, people look for the needs end of the market if possible, the smaller units and maybe some of the larger units, maybe larger houses, providing they're not too expensive and hit by stamp duty, or the smaller elements, which is the more the needs end of the market. But I think the market is responding. I think we're finding that there's quite an overhang, oversupply in some areas, particularly in central London, but elsewhere hasn't been too bad. Help to Buy has been a big factor as well, of course.
Do you think the government should get involved more in the new build market? Is there a potential thing for them to get involved with the opening up of some of the land that the land banks are being held by?
Well, there's a lot of talk about this. I mean, of course, the government have talked about their target level of 300,000 homes a year from the mid-2020s. At the moment, they haven't got an earthly of getting that to that. We're way behind that. They've been helped recently by the net additions of office to residential conversions, but that's going to fall away. We've really got to get the building numbers up, and a lot of people have been saying the only way we're going to get them up to anything like the level that they want is to introduce more local authority involvement, but that's also can be fraught with danger. I think certainly more of the housing association market has been a very successful model in the past and helps to often provide affordable housing would help. But one thing the government could do, and they could do it almost straight away, is to remove the uncertainty of Help to Buy. It's only going up to 2021 at the moment, but as I said a few moments ago, some of the decisions made about building could be taken 3 or 4 years before the event. So if they were to come out fairly soon and say, yes, our intention is to extend the Help to Buy scheme, that would give a lot of certainty in the market.
Okay, look, Jeremy, we've got to leave it there, but thanks indeed for joining us. That's Jeremy Leaf from Jeremy Leaf & Company, the former chairman of the residential branch of the RICS. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.